You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry. We've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
Welcome back to This Week in Futures Options, the program here on the Options Insider Radio Network, where we break down, surprise, surprise, the week that was. And it's currently still is, actually, from a futures options trading and analysis and trends perspective. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-fun, ever-exciting Options Insider Radio Network. In addition to TWIFO, show 14 on the network, you can also find our latest edition, a fairly silly one, the Business Show. If you like some business news with a dose of nonsense, then that may be the show for you. First explicit show on the network, so keep the kids away from that one. But check that one out wherever you find TWIFO, which is, of course, the easiest place, the mothership, the flagship, theoptionsinsider.com, or, of course, iTunes, TuneIn, Stitcher, maybe a little Google Podcast if you are so inclined, or perhaps via our mobile app as well. So no shortage of ways and places for you guys to download and stream the show. And then while you're listening, while you're streaming or downloading, send us your questions, your comments. We love to hear from you guys. Speaking of hearing from people, we're going to hear also from my cohort, my partner in crime, my friend / nemesis here on the program today, Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use a lot around here called QuickStrike. Nick, welcome back to This Week in Futures Options.
Yeah, the weeks go by pretty quickly, don't they?
Yeah, it's crazy. It's been another week. Seems like we just chatted yesterday and it's already been a week.
It has been, and how much the world has, as much as it's changed, it's remained the same after all that time, funny enough.
A lot of Sturm and Drang, and then we're kind of back where we were. It's kind of crazy. If you had told me, maybe we'll get to it in the rates. I don't want to preface it too much, but if you had told me a week ago that now we'd be talking about potential rate cuts in the near future and those being priced in with some actual probability to them in the marketplace, I would have said you were a crazy person. But a week and a half post FOMC, look how much the world has changed, has it not?
Yeah, I mean, it's changed, but I think we tweeted something out earlier in the week. People have short memories, right? So there's a reaction or a overreaction, and then it looks rosy again, and people are moving in that direction. It's especially in the equities, right? So we could talk a little bit about stuff. I think there's still some pessimism out there in the rates in particular, just in terms of where they are from a level standpoint. But yeah, it's that people want to forget about the pain and go right back to the gain. It's interesting to watch.
Yeah, this flip has been crazy. The explosion in volatility and then sell-off in volatility, the huge moves in the equity indices as a result this week, the craziness in the term structure out there and the yield curve and everything else. In fact, we tweeted out before the show, Nick, we asked our listeners, hey, what do you guys, what kind of most surprised you? Which products most surprised you in this first week post-Brexit here? And we gave them the choice of volatility, the rates, the equity indices, or FX. We didn't specify. We said, it could be British pound, euro, or pound, dollar, euro, USD, whatever floats your boat. We just gave them broad product categories. And Nick, as of right now, as of showtime, what do you think is winning the charge there, sir?
Something to do. Well, I know how I voted, so I'm going to go with the equities.
Equities are close. 42% for the equity indices, but leading the charge, 50% right now for volatility. And that's actually not surprising. We just finished our Volatility View show a few hours ago, and the numbers, in fact, let's look at, I don't have where the VIX cash closed, but the numbers there are effectively, it's the biggest down week in history for the VIX index itself. Let me just see if it closed below 16.5. I have a good feeling that it did, but for some reason that screen is closed now. There we go. 1486 is where the VIX cash closed. So yeah, this was the biggest down week in the history of the VIX product. So that probably is some reason why volatility leading the charge there, Nick. Not exactly surprising. But number two, equity indices. We'll get into those in a little bit. Of course, SPY, but also E-minis, etc. And then bringing up the rear, FX. So the pound USD, euro USD. That's probably because maybe the paper out there wasn't as surprising. We talked about it on our last show. Hope you listeners liked our hurried up post-Brexit show. We wanted to get a show out to you guys pretty quick and get it out that same week so you guys can really sink your teeth into it. Hopefully you guys enjoyed that accelerated schedule there for TWIFO. But Nick, maybe where do you feel like starting this week? We have so many products to talk about. Maybe the rates. You think those are catching your eye this week?
Yeah, we can go there. I think it's kind of a broad discussion this week. There was nothing that was really crazier than last week, and I think that we discussed it as part of the show. We just wanted to wait and see and watch what the reaction was following, Friday's sort of knee jerk, and then to see what the markets thought after the fact. So as far as the rates go, we'll start with the 10-year, I guess. The futures continued higher, or the yield or the rates continued lower. So there's still sort of a bias towards that flight to quality, right? People are going to the U.S. Treasuries to invest, and the expectation that the growth is going to slow, and there might be more of a more of a bias towards, like you mentioned, that the rates aren't going to go anywhere for any given amount of time. But if we look at the 10-year, that's what we tend to focus on if we're going to look at the longer end of the curve. Still, tremendous increases in open interest in both the weeklies and the two front months, which are August and September. So there was like a 17% increase last week, another 20% increase this week. August is up over 1 million mark in open interest, and September is closing in on 1 million. So lots of liquidity, lots of trade there. Majority of the action seems to be taking place in the on the upside. So some of the big changes we saw in the 10-year were the 137 calls let's see, where am I in the change in open interest? Yeah, we have some 137 calls out in the August contract. So that was almost like an open. So a lot of that took place. Let's see what the time frame now that we can dive in a little bit more deeply. A lot of that action took place. So of the 83,000 that traded in that 137 call in the August contract, that's the front month or the front real serial contract. There's other weeklies in front of that. Majority of that trade took place on Monday, and I'm going to give a little plug out there. The TWIFO now has the ability so you can click into the different cells and see some details around that. So we're able to see the actual volume breakdown on a day-by-day basis. So big change in open interest on that Monday and the 137 calls. Again, people kind of getting poised for where they think the underlying might go. And generally could look at it a couple of ways. People running to catch the upside trend. After what happened on Friday, maybe some people came new to the market, or they saw the continued follow through on the rates themselves. So there's more of there's more a running to that part of the strike range. But it's not a surprise we saw a continued increase in the futures here. We didn't see so much on the short end here, but with that increase, surprisingly enough, we saw the skew come off. As the continued increase in the underlying, we saw the calls actually started to get a little bit lower bid in comparison to the puts. So if you're looking at the report, you're going to see that all the 25 delta risk reversals start to see they're in the red. So there was that sort of rush to the upside, and then as we kind of approached that new range, some of that came off. So maybe there was a little bit of opportunity there to sell some of those people that were looking for some of that upside. And it's off quite a bit. When you get a vol off in that skew, that's a significant amount in ticks. So, that seems to be the pattern here this week. Change in skew on the downside, change in volatility on the downside that followed the move up, with majority of the trade being on the call side at this point.
Yeah, that it is a big move, and anything of that substantial from a vol perspective is a big move. Even if you're not that familiar with the 10 years, you can probably wrap your head around the size of a move like that from a volatility perspective. Before we keep going, Nick, you mentioned how people can play around with this. I'll make sure we didn't mention at the top of the show. I'm going to make sure you guys know you can follow along, of course, at cmegroup.com/TWIO, TWIO, this week in options, and you can get right there, nice and free, your own version of this quick strike this week in options. I know, no F, don't bring that up. It's a long discussion. This week in options report over there, and it can break down a lot of the detail we're talking about. So changes in open interest, changes in volume, changes in skew. Very important if you're out there actively trading right now. And Nick and I, kind of the secret sauce, we're playing around with an enhanced version of Quick Strike where we can really deep dive into a lot of these cells. And you guys are starting to see some of that functionality over there as well. So not only can you just see the report, what it spits out at you, but you actually can click on some of these numbers, get a little bit more detail on where that volume went up, what kind of volume went up, puts versus calls, etc. It's really cool stuff. So if you haven't done so yet, surf on over there to cmegroup.com/TWIO and check it out. And again, it's completely free, costs you nothing. So check it out over there. And Nick, I know before we get into your old stomping grounds of the old Eurodollar, I know you got a couple more things scratching at your throat there from a 10-year perspective.
So yeah, Mark, I wanted to point out just a little bit more about the 10-year. We had some large volume numbers from the 129.5 to the 137 strikes, and a pretty nice trading range at this point. And if you go look with the current volatility, it's around 5%, maybe a little bit better in the August contract. The strike range for one standard deviation is about from the 131.5 strike to the 134.5 strike. So again, you can find that information as well on the expected range report, which is also free on the CME Group website. And a lot of the activity we saw on the puts and on the calls, we had a big activity in the 129.5 puts from a volume standpoint. That's in the second standard deviation, and the 137 calls that we mentioned as the high volume leader and the big open interest change leader, that's in the third standard deviation. So those are 5 delta calls. So you saw a lot of action in a wide range of strikes here, and that could be for a number of reasons. People covering themselves from an upside standpoint, especially on the upside standpoint. I think you see people reach sometimes for those upside And those are pretty. I won't call them cheap, but those are cheaper calls when you start to get into that third standard deviation at a 5 delta. So I think we're gonna, again, not being a technician, I think we're gonna see like a trading range. When we were in that range a little bit prior to the Brexit stuff that was going on, but maybe a range based on the open interest of like 131 half, 134 half, and then you might see some of these calls that are further out and these puts that are further out. In the standard deviation range of the strikes, you might see some of those start to close over the following week if people think they got their money's worth in terms of the sale or the buy. So that'll be interesting to watch.
Yeah, speaking of interesting stuff, we are recording. If I sound a little bit different, listeners, we're recording in our mobile studio out here, not in the Options Insider Studios in sunny Chicago, but in far more sunny. At least it was until we started recording Florida here. So if you hear some crackles of thunders, it is just the daily storm rolling through here in sunny Florida, and hopefully it'll blow over soon. But Nick, I know you were talking a lot about rates. Eurodollars are obviously your old stomping grounds. A lot of interesting activity out there this week. Anything really lighting it up that's catching your eye this week?
What did I see out here? Last week we talked a little bit about how the action seemed to move out a little bit on the curve after the Brexit took some of the wind out of the sails in terms of the Fed potentially doing something with tightening the rates. So this week we saw action move back into the whites or the front months. We saw a small percent increase in open interest in the Eurodollars. Now we call it a 2% increase, but when it comes right down to it, that's almost 400,000 contracts. So that just tells you the pool of liquidity that's available in the Eurodollar option contract. So again, if you're looking for something that's easy to wrap your head around in terms of numerical values for the premiums and that type of thing, the Eurodollars is the place to take a look because lots of liquidity, lots of strikes, and lots of months to view. And you can really, get a good perspective of what the market's doing just by looking and seeing what's trading out there. But, if we're looking at just, the standard stuff, volatility's off across the board. So we had a big bid at the end of last week and stuff's off tremendous amount this week, in the high single digit ranges. So for instance, August is off almost 10 vol. So again, you see that opportunity where some of these events occur to augment the volatility, and there's some trading opportunity there from a sales standpoint, right? Or from a, if you were on the right side of it, you can get your money back by scalping your gamma as well. And then we also see a switch on the skew as well. So last week we're in the positive territory for the July and the August, and that's not uncommon. It was positive on the call side, right? So calls were bid greater than put, but here you see we moved on the August. We're going to focus on because that's got 42 days to expiration, and even on the September and the October, those all moved down, meaning the puts got a better bid. And I believe we mentioned last week how it looked like the downside in the Eurodollars was as cheap as it's been in comparison to the at the money, or the upside in a long time. And we talked about selling put spreads and stuff like that to sell at the money and buy the cheaper downside volatility. So you saw sort of a return to those downside puts from a skew standpoint. Again, we look at the 25 delta here on the report. You can go in there and change it to any of the delta reports. But again, off in volatility, which is sort of expected after we sort of go through the event and come back again, right? Especially as stuff gets bid. But surprisingly, I think a bigger hit to the skew than I would have anticipated. Although, we're really limited on the upside that we can see on the short term part of the curve, right? I mean, I don't think we're going to go into the negative rate range here. So
no, not yet. Probably.
People kind of caught themselves. Yeah, you never know.
You never know what Miss Yellen and her crew are cooking up. But
I'd hate to see it. We'll be sad if that happens from a trade.
It would be quite a flip from talking about raising a week and a half ago to going negative in the span of a couple of weeks. That might be time, I think, for her then to abdicate the old throne. Clearly, they have no handle on what the heck's going on. But that's a conversation for another day. Speaking, you mentioned skew developments. Let's move on then to the realm of FX in particular. Still the currency du jour, the pound. Another active week for the old pound dollar play, with a lot of play coming, as you might expect, once again in the old front portion. August taking up about 65% of overall volume, so no surprise everyone's playing kind of short-term front month as this Brexit thing is kind of just exploding in the near portion of the curve. We talked about puts last time. This week, actually, the 1.4 calls actually were leading the charge in August with about 4,500 of those bad boys. They're far and away the volume leader. The next biggest being the SEP 1.365 calls. They're only about a third as much volume. So clearly, the front in the 1.4 calls is where the action was. Overall open interest up about 23% or so over the past week. So pretty strong numbers yet again as people still try to process this whole Brexit thing. I mean, we had a vote last week, but that really is just the beginning of the process. It's not the end, as we said in the last week. There still are probably years of negotiations ahead of us as we figure out how all this is going to play out, what model they will take to leave the EU. Will Scotland and other nations perhaps try to follow and separate themselves from Britain, or other nations leave the EU? A lot of other shoes have to drop here, and we saw that reflected not so much in the volatility, which actually came off a bit in the pound this week. Again, not that unexpected, I should say, because we saw the big event last week, and now post some of the drama, some of that vol has been wrung out a little bit off a couple of handles from a vol point perspective across the board, except for the front month, which isn't really got about a week to go. It's not really vol at this point. It's more just pure gamma. And then in looking at skew numbers, skew still creeping up though, even though vol coming off, again indicating that puts, even though this week the calls were the most active overall from an open interest perspective, puts still dominating the conversation. Again, that's not surprising. We saw a lot of vacillations out there last week with the pound hitting, I believe it was I think a 30-year low, 31-year low versus the dollar, and then rebounding off that. So we've seen a lot of vacillations out there, but still puts the concern still to the downside here as we're settling out around these levels. I know you're not an FX guy. I really am not either, Nick, but anything catching your eye out there? Or perhaps we can flip the script, all the way over to the Euro USD, which has seen a reaction to this, obviously, but a more muted reaction than the pound itself. Obviously, the pound is really where the action is. You saw open interest up about nowhere near as much as we saw with the pound, only about 8% out there in the Euro USD this week, Nick. About nearly half of that volume also coming in that front portion of the curve. I say here as the skies erupt in sunny Florida, we're getting our daily torrential downpour. If you hear that deluge in the background, listeners, don't worry. I'm not being flooded away, at least not at the moment. I'm several floors up, so I should be good. A different story also out there in the Euro USD with puts the volume leader this week. In particular, the AUG 110 puts about nearly 8,000 contracts lighting up that one. That's 1.10 puts, not 110 puts out there. So a lot of action out there. And of course, with the puts leading the charge, and given what we've seen over the past week, the put skew still leading the charge, up nearly a point across a lot of the months out there, showing the puts still have some love out there. Anything else catching your eye out there in FX land, Nick, or you want to move on to maybe something a little darker and stickier?
I'll address the pound really quickly. I think you did mention the 1.4 calls, and one of the nice things that we can do now is we can click on the volume leader and see when that volume actually took place during the week. And the interesting thing here for the 1.4 calls in the pound is that it was a big opening from an open interest standpoint, but the majority of that volume took place on Tuesday. So that's almost like people came back into the market saying, okay, we kind of hit our bottom. We're kind of oversold. We're rebounding a little bit. Let's get back to where, it traded 1.5 just prior to the Brexit, right? So it had priced in a remain. Now we're putting B's in front of everything. It had priced in a remain as opposed to the exit. But, Tuesday, after the dust settled a little bit, we saw call buying in a 1.4 strike, and that was a big increase. That was a 3,000 lot on that day with almost as much in open interest change. So, maybe we see a little bit of, okay, we hit our bottom. We're going to sort of run as everybody sort of digests this, understand it's going to take time, and it doesn't really change the way that they function. There's going to be some more ramifications, obviously, in terms of the process, but all in all, it's going to stay the same in terms of what they're capable of doing. So maybe we're going to see a little bit of a run up. There was some people buying on the upside there. So I think let's keep an eye on and see how much upside we get next week. I mean, again, a short week. We're going to trade on Sunday night, I believe, for a little while. So might get it'll be interesting to see again what happens with not a lot of people around, but then some follow through after Independence Day, and maybe we'll trend to move a little bit higher based on that trade call.
Yeah, of course. Markets closed here in the U.S. for the Independence Day holiday. So for our international listeners, you guys get partially a day off too, really. Futures options market's not the same beast as the domestic equity and index markets, which are all shut down. You're right, Nick. Some of these products still printing on Sunday. So if you're a futures options guy, you don't get the same extended weekend as you do here if you're just, let's say, an Apple options trader or something along those lines. But still interesting stuff. Let's move on. Speaking of interesting, it's been interesting, kind of across the product categories. It's one of the reasons I like doing this show, Nick, is because you can kind of just throw a dart and pick your product, and there's some interesting activity in it in a week like this. And oil is certainly another one of those products that has been moving a lot. We saw it kind of take it on the chin, kind of in a similar pattern to what we saw in the indices. The oil taking it on the chin post-Brexit, kind of a combo of Brexit and also some supply news coming out of Canada. They're starting to turn it back up again after the wildfires there, as well as some supply news in Africa. It seemed to all kind of combine to weigh on crude. It knocked it off substantially. Now it's up quite a bit again. Open interest, not as up as much as you might expect, only up about 5%. Still, that's good for a product that does a lot of paper, like WTI, for example, which is where we're looking right now. And again, once again, reflecting the activity with Brexit, AUG is leading the charge front month, about 60%, so nearly 2/3 of all the paper going up right there. And when we're talking paper out here, Nick, the 45 put is where the action was this week, to the tune of about 32,000 of those bad boys lighting it up earlier this week. We can see, you're right, in a nutshell, where a lot of that came in, and a lot of that coming in on Monday, actually. We said about 32,000 total for the week, about 11,000 coming in on Monday. I love these new tools here, Nick. This is really, you can really get pretty deep on some of these products, which is awesome. Listeners, if you haven't gone over to cmegroup.com/TWIO, I almost said Quick Strike /TWIO, and checked it out for yourself. Go do it right now as you're listening to the show, because you can really play around with a lot of cool stuff. And Nick, we can see that between just Monday and Tuesday alone, nearly 20 of those 32,000 contracts lighting it up. Again, not surprising that we did see, those are two big underlying movement days for crude, and the 45 puts still leading the charge out there, which may surprise some people given the kind of the upside action we saw, particularly in the latter portion of this week, Nick. The downside story seemed like it was last week and the start of this week, and then bam, the rally, and yet the calls were never able to outtake the puts. That's where the action was. Speaking of puts, we also saw that bid continue to the skew, with the puts up about a vol point to a half a vol point across most of the months out there. So the puts still getting some love, no doubt, in partially, if not primarily, due to that massive amount of 45 puts lighting it up this week. But overall, particularly given the rally we saw a latter portion of the week, we saw crude vol coming off between 4 to 5 points out there in the at the money crude vol, as we're seeing the post week rally kind of following along with the equity markets, and we're seeing vol coming in. So an interesting week. Nick, what else is catching your eye out there in the realm of the Texas tea?
Right. Well, I think, as you mentioned, you saw there was a pretty dominant put buying there. And if you look at the volume numbers for the week, you have like 1.5, almost 1.5 times the number of puts as you do of calls. And that's generally with, August and December leading the way in terms of where the volume is. But what's interesting is, right, so that's the volume in favoring the puts. But if you look at the open interest itself, you'll see that it's under one, which means there's more of a bias on the call side, and a lot of that's taking place. It's almost it's 0.63, which means, or you could call it like the calls are almost 1.5 times more popular from an open interest standpoint in the December contract. So short term, a lot of put buying, and that a lot of that probably had to do with reaction to what happened and the way the market reacted after the vote last week. But long term, because the December contract has the most open interest, it's June and December typically have the most open interest in the crude oil product. but the December long term, you're seeing a lot more bias towards the call. So short-term interest from a downside movement standpoint. Long-term, maybe continue to see a price movement upwards as far as the open interest is telling us. And again, this is conjecture, right? We look at the numbers and we sort of make a guess based on where it is on the curve from an expiration standpoint, what's happening right now, that kind of thing. What strikes are trading, those kind of things as well. But 45 strike, very popular in both the August and the December. And I guess since there really isn't much of a wacky trade in it, this just sort of caught my eye here as I was looking at it. We did have a 1,000-lot trade in the 73 calls in the November crude oil.
Oh. And that qualify as wacky. Some might even say hashtag crazy trade of the week.
Right. It could very well be the crazy trade of the week because that's up there. And let's take a look. We could take a look and see the details about that. And do we get it? And that traded on Tuesday and also traded again today. So somebody came in not once but twice to get on the board in that. And you also saw a 600-lot trade in the 60.5 strike. So, so again, sort of a trend here, right? We're basically recovered from where we were prior to the Brexit. So, and even though vol was considered low in the crude, it's lower still this week, right? So we're off quite a bit from a volatility standpoint. So, vol can always go lower. People say vol's cheap, it can't, but you know what? If we're trading in a range and there's not much expectation or we're choppy within a range like that, even though you can trade that, if there's not much chance of people expecting a move, you're going to see the price kind of decline. So that's sort of the interesting thing we're seeing here. And still, unfortunately, and I check it every week and I check it every day as well, still not a whole lot of love in the weekly option volume. You're just not seeing it in the crude yet. And I'm waiting to see that change.
That is surprising to me because if there is a product that has a near-term story changing week over week of late, it certainly has been crude. You make an argument for some others like recently, like gold. And of course, we talked the pound and euro and a few others. But generally, crude has been lighting it up week over week for the better part of the past year. So you'd think that would certainly drive interest. Certainly in terms of commodities, one of the reasons we wanted to launch this show was so many of our listeners, not just institutional, but even on the retail side, wanted to know more about what was up with crude. And so that was kind of the genesis for this program. And so it seemed like a lot of retail who can't get enough of the weeklies and the equity and index side would also like a nice bite-sized contract. And yet, for whatever reason, the big crude oil weekly options not lighting it up. I think that merits further investigation, Nick. Maybe that should be a TWIFO special report on a future episode. What do you think?
Yeah, I think we got a buddy of mine over at the CME, Jeff White. He might have some answers, and I think he gave me some answers before. But maybe we throw him a question and see what he comes back with in terms of a good answer for us, because I'm still not quite sure. In fact, the more I think about it, the more I think he might have said something to me, but I'm gonna have to revisit that and try to give our listeners an idea why that's the case.
While we do that, I'm going to dig a little more into these Nove calls too, because I think they might be our candidate for the crazy trade of the week. But while I do that, Nick, why don't you? We're already going a little long, but so much to talk about here that I don't think our audience will hold it against us too much, listeners. By the way, of course, we're not streaming it live. If you're saying where's the live stream, we'll be back next week with a live stream for you guys to chime in and listen along and ask live questions and all that fun stuff. Kind of hard to do in our mobile studio here from formerly sunny. Now it looks like I'm in the eye of a hurricane, Nick, Florida here. So hopefully I don't wash away in the next long enough to finish the show at least. But Nick, while I dig into some of these WTI calls, why don't you give us your rundown out here? Gold has obviously been moving quite a bit. Of course, it kind of settled down for a while. Then, of course, all the action with rates and now Brexit kind of giving a nice little flight to quality there, particularly in the initial post-Brexit madness. Everyone was just stampeding into gold. So we saw a lot of action, obviously, particularly in the calls in that early days. Then how did it shape up after that?
All right, so let's take a look. I'm trying to take a look at on the week here, right? So yeah, so just looking at the report, we're up for the week about $22. and the change today is about $23. So prior to today, we had not done too much in terms of underlying movement. But wanted to make I do go back and listen to our broadcast just to make sure that anything that I said was accurate, or to at least be able to address some of the stuff we talked about last week. I did use the term handle last week, and I said something about gold being up 60 handles, and a handle is really if for instance, if the gold right now is 1343, the handle is the 4 part of that, and I said 60 handles. It should have been like 6 handles. So I just wanted to
it's an easy mistake to make, Nick, jumping from product to product. Some are ticks, some are big handles, some are smaller. It's I do it all the time too. Don't beat yourself up over it, sir.
Oh no, it's a self-correction, and I just want to make sure that part of what we're trying to do is sort of give a little bit of knowledge out every week as well. So, in the pit, if somebody's quoting 3.4 and you said, what's the handle? You wanted to know whether it was 43.4 or 33.4 or 53.4, especially in big moves. So 6 handles, like $60, that's the move there. Anyway, but yeah, if we start to look at, the calls again, like you said, dominate the volume and the OI from a put call ratio standpoint. Long-term view appears to be price moving higher, right? Just based on if you look at where the action is on the volume from a contract standpoint. So SEP on out, we have majority of the activity being the calls, and the put call ratios out there are favoring the calls as well. The front contract, or not including the front contract, the August contract, a pretty flat put call ratio, about a 1.0, meaning equal volume and equal open interest there. So interesting, no extreme strike trades, more trading around the money, and you're kind of working within a range there. So and I generally I try to go look at the open interest to see if there is a potential trading range that's available. So right now, if you go look at the open interest, and you can see again, those tools are available on the CME Group website. We look like we have a trading range around 1300 to 1350, and 1300 was again, not being a technician, but just looking at the charts, was sort of an upside barrier before we got through that last week, and then we kind of topped out over in the 1350 range. So 1300 was an upside barrier before. Now it looks like it might be a support level, and after that we might have a 1250, and then after that would be 1200. So let's see how it fans out next week and see if we're in that. And we have been within that 1300 to the 1350 trading range, but you can go look and see like where the spikes are, like where the fangs are in the open interest, and get a pretty good idea where people think where the buying is on the upside and where the buying is on the put side, and a lot of times that will lead you to sort of establish a trading range or a strike trading range for yourself. And then, open interest up 5% with big volume in the August and December contract. So again, easy contract to trade from a numeric standpoint. A lot of activity here. You're going to get some, as long as there's some uncertainty now. It looks like rates aren't going to go anywhere, and there needs to be a flight to quality, right? Your flight to quality, we mentioned earlier in the show, is going to be interest rate products, and then you're going to have gold, right? Because if the currencies look weak, people want to get into the precious metals. So that's what I'm seeing interesting in the gold today.
Yeah, Nick, I probably should bring it to a close soon before the flood gods decide to wash me away over here. We're kind of pushing our luck, but before we do that, let's check back in really quickly with our former product du jour. Seems like it's kind of been on the back burner a little bit as macroeconomic problems and issues have taken the front burner. But let's go back to check in on the realm of the beans, because it wasn't a quiet week. We saw a bit of a rally towards the latter portion of the week, so pretty much getting back any losses they had last week. So if you thought soybeans were kind of quiet, they weren't. They were moving quite a bit. Looks like vol coming off across the board, except for October. That seems might be a little bit of an outlier there. Obviously, some funky trading going on there might have skewed those numbers a little bit. But aside from that, a lot of interesting stuff going on out here in the soybeans realm. Even though again, soybeans a little bit on the back burner. Up about 9% from an overall open interest perspective, from an options perspective last week. So volume still lighting it up. And this again kind of following the pattern that we see with soybeans, not so much front month driven as it is kind of the new crop, old crop, and the rotation driven. So we're seeing the November leading the charge with about 50% of the overall volume out there. About let's see, about a quarter of a million contracts in that, about 50%. Again, soybeans an active contract over there at CME. And looking at the numbers from what was leading the charge this past week, again, rally towards the latter portion of the week. So not surprising that the 1,300 calls leading the dance with about 37,000 of those bad boys tearing it up. Nick, anything else catching your eye, and anything else you can tell us about some of these weird outliers we're seeing over here in October? Those are just some funky prints, I'm assuming.
Yeah, so I think the first thing I want to point out, like you mentioned, basically recovered our losses from last week, so we're flat to up slightly this week, and 1,100 puts and 1,200 calls in the August or Q. Those are the volume leaders for the week, and again, like we mentioned with the gold, we have the 1,100 and 1,200 strikes are also the open interest leaders in the front month, the August. So again, sort of a range being established here. And if you go back and look over the last 2 weeks, we've had a low settle of around almost 1,100 or $11, and a high settle of 1,175 almost. So again, the 1,100 was a price that was an upside, and then we got through that a while back, and then that sort of pushed us a little higher. Now, again, it's established itself as a downside. Again, I'm not saying anything that's tremendously insightful here, but again, if you go look at the 2-week range and you look at the open interest again, you start to see, a pattern. And I like looking at those patterns from the standpoint of, well, where could I trade these from, the 1,100, 1,200 strikes? Are those worth looking at doing a strangle, for instance, where I would sell that and want to sit around and see what happens if I trade inside that range? And I can go here and you can find the same thing out on the CME Group website. If I look at the what the standard deviation looks like, 1,100 and 1,200 are within the first standard deviation given the current volatility for the August contract. So maybe those aren't such a good, place to be from a strangle selling standpoint, but maybe you stick to the 1,100 as the downside and you go look and see where the other higher open interest numbers are on the upside. But we're seeing the same thing pretty much in the November contract, where you got 1,100 and 1,200 are the big open interest leaders, and then you have large OI positions in the 1,300 and 1,400 strikes in November as well. And these were the open interest leaders. The 1,300 and 1,400 strikes are the open interest leaders for the week. So a lot of openings there for that higher side. So I think people kind of they're reacting to the price action and trying to cover themselves as the market's moving around.
All right. Thank you for that, Mr. Howard. And before we go, well, first off, let me remind you guys again one last time, surf on over cmegroup.com/quickstrike. You can go over to the Quickstrike website and sign up over there too, but it's all set up and ready to go for you on the CME Group site. And you just click on it and check out the report. So it's probably the easiest way to go, and it's completely free. So check it out. You get the essentials. And actually, Nick's been kind enough to really keep upgrading that tool. So it's a little bit more than the essentials now. It's really cool stuff you can get over there, and it's completely free. It's kind of a ridiculous deal. Surf on over cmegroup.com/TWIFO this week in options to check it out. And Nick, before we go, you and I were talking here on the show. We're playing around with a lot of these enhanced features that you're adding all the time to QuickStrike. What else are you guys working on over there for the QuickStrike platform that our listeners can enjoy?
Well, I think probably in a couple weeks, you're going to see a bunch of new currencies that we added. So we split the current FX market that we have into majors and emerging markets. So as you start talking about China and the other emerging economies, I wanted to try to get more information out there about those individual countries. So we're going to see an emerging market section in FX, and then we're also going to split the metals up into precious and base metals. Right now, the only base metal we have is copper, but we're going to add some stuff there. And we're also going to add the ferrous metals. And part of the reason for that is for the iron ore, which is a big deal when it comes to production and building in China. So, the New Zealand dollar, the Aussie dollar, the iron ore, and we also added the renminbi, the Chinese currency. So we're looking to try to maybe do some sort of specific overview pages as well. So if you want to get an idea of what's happening in China or things that are affected by Chinese activity, we've added some products so we can sort of increase some of the information that's targeted towards a specific area. But as always, same thing. Go out there. We'll we'll keep you up to date in terms of the additions that are being made, and hopefully some of these click-through additions to the TWIFO will be available shortly.
Yeah, and listeners, while you're at it, while you're checking out the TWIFO page there, throw Nick and his team a follow over there on Twitter. They're Quick Strike 1, QUIK. No C, STRIKE 1. And you can follow along with a lot of the updates and charts and cool graphs that they tweet out throughout the week in between. It's not just the TWIFO show here, There's a lot more cooking over there at Quick Strike. You can check it out. Give them a follow over there on Twitter and tell Nick you like the show. It's always fun to get some feedback. Let us know what products you like, what products you trade. Maybe you have an obscure product we haven't talked about yet here on the show. Let us know. Maybe we'll find a way to rope it in. Or you have an idea for the crazy trade of the week. We like to hear those too. Hit us up. You follow Nick on Twitter at QuickStrike1 or follow us, of course, at Options, and let us know your thoughts on the program. And we'll see you next time for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.